Hi, I'm James Nelson, partner of Massey Knackle Realty Services, and I'm here to bring you the Nelson Reports podcast for May 2014. So we just wrapped up our first quarter report for the New York City investment sales market, and it looks like this year could be a record on all accounts. In total, it looks like we're on pace for about 5,020 sales across the 5 boroughs, which is going to be slightly more than even 2007. Now, it looks right now that the dollar volume could end up at about $53.1 billion, which is potentially off 2007's $62.2 billion. But again, it's important to remember that traditionally, first quarters are a little bit sleepier than the fourth quarter. So we could still very well eclipse the total dollar volume as well. Now, the boroughs had a big part of this increase. In fact, they accounted for 82% of the sales. This is compared to 2011's 68%. This accounted for about $3.6 billion in dollar volume, so there's been a lot of activity out there. On pricing, Manhattan pricing skyrocketed up from last quarter, up 25% to an average of $1,315 per square foot. A big part of this is retail. Retail is now averaging prices over $5,000 a foot in Manhattan. This includes the record-breaking sale, highest price per square foot ever in New York City, and for the U.S. for that matter, Chanel's purchase of 733 to 39 Madison Avenue for $123.8 million, or $30,950 a square foot. So, in fairness, if you take that one sale out of the equation, Manhattan's values certainly would not have gone up 25%. It would have been a much more modest, but still very exciting news on that front. Meanwhile, the borough's average pricing went up by 8% to $258. Bronx is the most affordable at this point at $156 a foot. When you look at cap rates, the average cap rate across New York City is 5.6% for all property types. Manhattan being the low cap rate at 4.1%, meaning that investors are willing to accept lower returns here in exchange for hopeful future upside and appreciation, whereas in Bronx, you can still get an average of a 7.1% return. So if you're looking for good cash flow, the Bronx might certainly be worth checking out. Meanwhile, land pricing, development sites have been the big story, certainly coming out of last year. Pricing across the board, land $209 a buildable foot across the 5 boroughs. In Manhattan, up to $482 a buildable foot. This is well above the 5-year average of $363 a foot. And I think you're also seeing a lot more sales. In 2009, development accounted for about 5% of the transactions. Now it's about over triple that, 18%. And certainly on the high watermark end, we're starting to see development sites trade at even over $1,000 a buildable foot in the most prime areas. But when you factor in the commercial land, then that's what brings the average down into that range in the 400 or 500. So in all, we think that the market is still very healthy. Even though we're talking about over 5,000 sales this year, that still only is about 3.5% of the total inventory. The historical average is only about 2.6%. So it's not like the market has been flooded with new product. And there's plenty of buyers. Our website tracks 132 countries who have logged onto our site to check out properties that we have for sale. So a lot of buyers, certainly on the residential side. These new condos which are being added, they're being added 30, 40, 50 at a time, but we're not seeing thousands and thousands of apartments come online at the same time. In fact, right now the total inventory is still less than 5,000 condos in Manhattan. Finally, office space, it's only being built as anchor tenants are secured, so we see that as very healthy as well. So the only thing, of course, we're watching is on a more macro basis what is going on with the economy, and then certainly more what's going on with the local level, waiting to see what takes place with the de Blasio administration. So, but for now, we're certainly enjoying it while it lasts, and we'll continue to keep you posted as we see new developments. Thank you.